Now, South Africa is hosting G20 finance chiefs in Durban under the banner Solidarity, Equality, Sustainability, aiming to hammer out a joint communique on trade, climate finance and debt relief, despite high-profile no-show from the US, from India, France, and also Russia. Now, their talks are clouded by President Trump's threat of 100, or should I say 10% tariffs on all imports and up to 50% on steel, aluminium, 25% on autos from August 1, which Germany warns could tip Europe into recession. Now, even so, delegates remain cautiously optimistic they can still reach consensus by meeting's end. Now, to speak to us on this, we have Franklin Ngwu. He's an economist, chartered risk manager, and professor of strategic management and governance with Lagos Business School, LBS, Pan-Atlantic University. We also have Dr. Frank Lekaba, senior lecturer at Wits School of Governance in Johannesburg, South Africa. Thank you so much, gentlemen, for joining us at this time.
Thank you for having us.
All right, so let me begin with Professor Ngwu. Now, Professor, President Trump's threat of 10% tariffs on all U.S. imports, no doubt has actually cast a long shadow over these talks. How realistic is it that the G20 can deliver a unified communique on trade when such unilateral measures loom large?
If you've been following what Trump has been doing.
Professor, we seem to be getting an echo from you. Hello, Professor, please, can you disconnect your speaker? All right, so let me pass that same question to Dr. Lekaba. Dr. Lekaba, if you heard the question, please go ahead with your response.
Yeah, I think we can see, as things are at the moment, that tariffs are being weaponized, particularly from the US, in a way that there's no much space for diplomacy and engagement. And even the approach seems not to be an approach anchored in diplomacy and negotiation. Because tariffs are basically about trade and trade agreements. And states start to trade on the basis of their trade agreements and all of that. So it becomes very problematic if one party to the trade agreement unilaterally changes the agreement because of their whatever political interest or political changes at home. And of course, now the world is interconnected, Deshe. And as the world is interconnected, changes as they take place affect all of us. Even I want to believe the US itself will be affected by the kinds of positions President Trump is taking around issues of trade and negotiations. And that's why you have seen many countries in the world have been trying to reach out to the US to see to it that is there space for negotiation and engagement. And more so that I was listening to President Lula yesterday. He doesn't understand how the calculation of trade imbalance as the US administration come about. And it's the same concern as well here in South Africa to say, how is this trade imbalance calculated? Is it trade imbalance or is it issues of tariff? It's something that needs clarity. And I think from the global south, many countries have been trying to negotiate instead of being punitive or being at the same level as engagement as the US in as far as the aggression is concerned in terms of this tariff. It has been going around. The point is, let's try to engage the US administration and see how we get to clarify and come to a common position around these issues of tariffs.
Okay, now let's hear from Professor Ngwu. Professor, let's hear from you as well. All right, now let me just come back to you, Dr. Lekaba, while we fix the audio issue with Professor Ngwu. Now, Doctor, Germany actually warns that U.S. tariffs of around 30% could wipe out its entire 0.7% expected growth in 2026. Now, are we staring down the barrel of a recession? Would you say so?
Yeah, look, Duce, we are facing, all of us, even the U.S. itself, from the first quarter, the economy did not grow as was expected. So with how things are going in terms of these tariffs, we may, all of us in the world, this will be felt in relation to how one country or the degree of reliance and dependence on the U.S. trade. Some countries may to a certain extent not have such kind of an extensive meltdown because maybe they've diversified their trading partners. And others that are mainly dependent on the U.S. may have negative, severe consequences on their economies. For South Africa example, we have been having a challenge of growing the economy for the past, let's say for the past 10 years, our economy has not been growing as expected. It has been growing around 1.5%. And we are just coming out of a recession when COVID-19 struck us in 2020. So that says we are at the point of vulnerability as well here at home. I mean, here in South Africa. And this is a case for many African countries, I want to believe. So if the US pushes on this tariff as the Trump administration imposes them, of course now it's going to push us, almost all of us, into that economic meltdown. Of course, to some, it may be recession, some it may even be extreme than that, depending on their ratio of trade with the US.
All right, now speaking of, you talked about depending on the ratio of trade with the U.S. Now, the EU has actually said that if U.S. tariffs materialize, the leaders say that it could tip Europe into recession and Europe could retaliate. Now, how likely is the retaliation to happen? And are there tools on the table for that?
Yeah, I think there is an opportunity for retaliation because we're talking about trade here. So we're talking about one country having exports to the other and the other importing from the other. So, of course, economies of export. But, of course, I want to believe the EU, as we have already seen from the beginning of this trade warfare, where now Canada, for example, started to re-engage EU and started to talk about areas of cooperation with the EU. And we have seen China talking to Japan and other markets to see how they can now realign and try to absorb the shocks from these tariff impositions from the Trump administration. So that's what I'm expecting to see, that countries are now going to start to say, who can we now start to trade with and at what level and all of that to absorb the shocks that come with these US tariffs.
All right. Now, speaking of that, Japan as well, right, says that FX volatility from a weak yen is also a concern. Now, what tools can the G20 apply in order to stabilize currency markets?
At the level of the G20, I don't think there's anything they can do. I mean, I just looked at some of the communique that comes from the Finance and Governance Summit. Of course, they are raising the same points we are raising here. Issues of shrinking fiscal flexibility, high borrowing cost, high and rising debt vulnerability. These are the issues they are raising. And of course, everybody is in this bubble that we are experiencing with the US trade. And this is not of an accident of history. Of course, it's because of years of history of engagement with all the countries of the world, entangling the economies with the US markets and all of that, and everybody looking to the US markets to see how they can maximize, because there you are talking about big economy in the world, and you can draw benefits and all of that. So the only thing I can suggest at this point, Deshi, is, and I think that's what everybody is having at their disposal, to see what are the other markets that are available, that given the impact that all of them will be feeling from the US, how do they realign and re-engage that trade from the US to these other markets? How does Africa engage with Japan? How does China engage with Japan and Africa? And how does India do the same, in Brazil? I think now the discussion should be at that point. And I don't think G20, in my opinion, is a platform for that, because already G20 is exclusive in terms of its membership. So World Trade Organization is one such platform. And of course, the conferences, the trade, the bilateral agreements, China Africa Summit, EU Africa Summit is where now these kinds of discussions, I think, can be deliberated upon, and where we can now try to see how we, of course, the shocks will be there, the consequences there, but how do we absorb in a way that the magnitude is not so much, it's not so of enormity that it will destroy our markets.
All right. Now, let's focus on the U.S. Treasury Secretary, Scott Bessent, being absent for the second time this year, by the way. How can the G20, ensure that the United States remains fully engaged in crafting multilateral solutions to debt relief and climate finance and other programs?
I think there's nothing at this point except for diplomacy. And I think that's why you see there's been exodus of heads of states to the US, trying to talk sense to the Trump administration to rethink its position on this issue of tariffs, and also trying to expropriate markets, especially those that are exporting to the US, to move to the US and to produce from the US and export from there. Basically, that's the essence of these tariffs. And so you have seen that exodus of heads of state. You saw the German Chancellor was there. You saw the French. Macron was there. South African president was there. So we've been seeing that exodus of heads of states. I think that's the only option that we have at this point, Deshi. And G20, of course, is a good platform to say, come on board. I listened to the conversation between President Ramaphosa and President Trump, urging him desperately that please come to the G20 summit so that we can be able to engage on these issues with other members, with other heads of states that are in this club of the rich countries in the world or the growing economies in the world. So I think the G20 it faces a challenge of losing its own significance in issues of global finance and the essence of why it was established. Among other things, it was established to avoid the financial vulnerability that we are about to face at this point, and also to avoid the crisis of nature of the 2009 global meltdown. So G20 being insignificant because of this tariff war means we're opening up the G20 members and the whole world to the same possibilities of the financial crisis that we had in 2009. So what member states, I think, should do of the G20 is to continue the deliberations and to also try to continue engage the US, to re-engage with the G20, because it's a very important player and it has got a historical role to play in all of this. It's not that it's a small economy that we can do without. We can't act like US. We can ignore the significance of the US and the US market. But it doesn't mean as well that states don't have to move forward because the US has decided to re-engage and re-engage in terms of its trade relations and all of that. So G20 should continue to re-engage, to continue to engage the US, to come to the party and see how we avoid the vulnerabilities that we are about to face.
All right, now let's come back to South Africa, where you are now. The Finance Minister, Ngwu, called for bold cooperative leadership on climate finance. What concrete financing targets or even mechanisms, like green bonds or even loss and damage funds, should the G20 commit to by the end of this summit?
Yeah, I saw they're talking about energy transitions. Because that has to do mainly with the Sustainable Finance Working Group, how we finance these sustainability issues and how we make sure that that energy transition, but it takes place in what South Africa has now coined a just energy transition, that it doesn't happen at the detriment of those that are transitioning to this clean energy. So that was a major talking point I saw from the summit. And I think that's where the major focus is going to be. While the talk is about how to open up a space for fiscal flexibility, debt relief and all of that, but the issue of energy transition, I think, is going to be a big factor. And I think coming from this Czech summit and the one that was held a few months ago, I think around January, the point now is to zero in the discussion around energy transition. And I think that's what South Africa seeks to do at the end of the summit.
All right, now let's come back to Africa. Now, there's talks of an $80 billion financing gap in Africa due to declining Chinese lending. Is there a possibility that the G20 can back leverage multilateral development banks to fill it?
Yeah, I think that's where we are looking to. We're looking to the development finance. But now with the US withdrawing again from this multilateral institution, it undermines the whole agenda as well. So we are hopeful that although Trump withdraws from this multilateral engagement, but he doesn't withdraw from the established financial institutions, your Bretton Woods institutions, World Bank and IMF, because that's where we are able to plug and be able to gain some that gap that we're talking about. It's mainly coming normally from the World Bank and the IMF. So we are hopeful that the US is not going to pull that plug as well from these two big multinational institutions, multi-financial institutions, to come and close that gap of the billions that we have now estimated. So, but I think also it's an opportunity for African Development Bank, to see how we can take the space to make sure that a Pan-African institution such as the African Development Bank, how does it then close that gap as well? And of course, the BRICS Bank as well. I think it's an opportune moment for the BRICS Bank to come in as well and close that gap. So those are the alternatives that we're looking at. But given the consequences of the tariffs on also China itself, it makes very difficult for even these very same institutions that we see as alternatives to come in to close the gap.
Okay. Okay, now I'm told that Professor Ngwu has reconnected with us. Professor, thank you so much for joining us.
Thank you.
All right, you've actually missed out on a lot, but let's hear your thoughts and your opinion on the G20 summit generally.
I think the first thing to do is to remember and recall how G20 started, that it was more or less an effort after the 2008 global financial crisis for the top economies in the world to come together to see how they can be approaching global challenges from more or less a common ground. So with that, they've been trying, even though their communique or their meetings or their resolutions are not binding. However, it also provides a platform for global dialogue, global discussion, global partnership and agreement to create a better world, to create a more sustainable global economy. So on that note, the meeting in South Africa is, of course, is welcome, is important, however, the challenge is that given the way President Trump has been going on since he took over in the US, and given the fact that America remains the top economy in the world, then it creates a big challenge in terms of course, in February, America was absent. This meeting going on now that we finished today, they are still there, but the Treasury Secretary did not come, so they sent somebody. And also other top economies also are absent. So the challenge is that even while what they are trying to do is important, this emerging lack of consensus, this emerging decline in interest might start questioning the importance and the functionality of G20.
All right, now nearly 24 African nations are in or even at high risk of debt distress, and that is one of their main focus, at the summit. How do you think, or how will the G20 common framework and the newly proposed expert panel actually accelerate this relief? Still for
I think that currently, I think Africa's debt is about $800 billion. And given also the way President Trump has been, reducing aid, stopping aid, and also in Europe, you find out that many of the economies are rethinking their aid giving, their grants giving, in terms of redirecting some of their resources to defense and other things. So that puts Africa in a more difficult situation. And currently we have about $80 billion funding gap in terms of what we need. And also, given that we have about $800 billion as debt, creates a big challenge. And of course, if you now need more money, you have to go through to borrow at the market rate, which might not guarantee sustainability and inclusive growth. So what G20 can do, given their importance, given their leverage, is to see how they can rethink the kind of finances that Africa we need and going forward. I believe, and of course with issues in climate and other issues that we have in Africa, that a G20 that will look at a more, concessionary lending, concessionary loans to Africa might be important. But African leaders also have a big responsibility in rethinking our demand for loans and finances from the West, particularly from America, Europe, and even China as well. Because the more we keep borrowing, the more we run into debt crisis or debt challenges.
All right. Now, still on you, Professor Ngwu, we would ask the same question, we'll pass the same question to Dr. Lekaba. But, Professor, BRICS tensions, right, are surfacing alongside G20 negotiations. How will the clashes between these blocs over China's Belt and Road, or even Russia's financing needs, shape the final communique?
I think that the emerging communique is more or less, there's been a kind of well, I say carefulness or cautiousness in terms of the way the communique is emerging. In the sense that they are focusing, they are saying, first of all, that central banks should maintain their autonomy, they should maintain their independence, based on the way Trump has been criticizing the Federal Reserve chairman. So with regards to BRICS, it is expected that Trump and other Western powers might be concerned or might be wondering how the BRIC powers or the BRIC nations will maybe possibly start countering some of the dominance or preeminence of Western powers and European powers. So expectedly, of course, with the tariff from Trump and also targeting some BRIC nations, these tensions will continue. But what I also say with regards to Trump policies, that I think once you negotiate with him, he seems to be very, very open to negotiations. So he comes with these policies, but he now leaves the door open for negotiations. So what is important is then, if these things continue, maybe there has to be a kind of a dialogue between America, the BRIC nations, and to say, okay, how do we get a common ground? Because it's clear that China's influence is increasing, their influence is increasing, Brazilian influence is increasing, and when all these people come together, Russia and all that, of course it will be expectedly more or less a global force that America and Europe will be concerned about. So, but I believe that once there is a dialogue, once there is a discussion, there will always be a kind of an agreement or a common ground to sustain global growth and development.
All right, let's come back to you on the same question, Dr. Lekaba, on BRICS tensions surfacing alongside G20 negotiations.
Yeah, no, I want to first agree with Prof that there should be continuous engagement in the US at the bilateral level, I think. I think also BRICS is an opportune moment for BRICS to get real with its commitments that it has been making in its declarations. For example, they established a BRICS Development Bank. It's an opportune moment now to see how this bank is financed in such a way that it pursues and it helps to close that gap that the US is going to leave out. And it becomes an alternative force. But also, it's an opportunity for every state in the world that has been highly dependent on the US to rethink its trade engagements and trade agreements. And I think it's an opportune moment for us in the continent who have been crying foul of being at the margins of almost everything that has been happening in the global space. It's an opportune moment for us to think critically about our own development as a continent, coherent. And this is where now the African Union and the regional economic communities come into play. In agendas such as African Continental Free Trade Agreement, that it's an opportune moment to expedite all of these agenda items we've been having on the table, and we were not pursuing as we were supposed to, with the energy we were supposed to. So the dependency, the decline of the dependence on the US is an opportunity for us to also re-engage. But it comes with consequences. Of course, in the interim, we are going to have serious fiscal constraints when the government spending is going to be a challenge. And of course, now it comes to the issue of governance in the continent, which, according to Mo Ibrahim Foundation, has flatlined at 48% over a period of 2012 to 2022. Imagine governance being at that level for 10 years in the continent. It tells you something has been wrong. So it's now an opportune moment for the continent to critically look into these matters. And of course, I may be too confident and be optimistic in our leaders. But I want to believe the AU is a good platform to push all of these agendas into play. So civil society organizations have to also now engage and see how we pressurize the AU to get real with the African agenda of development. And push African leaders to also get real with the African development agenda. And also see how we then re-engage in the world in a way that the tables are almost equal for all of us to benefit from the global trade.
All right. Now, Professor Ngwu, now, if your final thoughts, if the summit fails to deliver a communique, what are the immediate implications for global markets?
From what we are hearing and following, I think a communique will be issued, but the communique will I say, take into consideration all the emerging issues, all the powers, contending powers or contending issues. And as I said, they've also said something about the autonomy of the central bank, that is important to maintain its independence and its autonomy. If they fail to issue a communique, remember that G20, the resolutions of communique is not binding. However, it will send a signal that since Trump started this current term, that many countries are trying to rethink and adjust with the approaches coming out from US. And thirdly is that by December, the G20 leadership will move to US. It means that it will not be very positive on the market. However, I do not think that it will create any panic or create any negative impact in terms of the global markets. However, it will show that that perceived decline in terms of the relevance or importance or the strength of G20 is continuing. But some people can also give excuse that this is because that US has been more or less not been very, very positive with regards to South Africa and BRIC and all that. So they might say, okay, it's fine. Let's wait it out and see how when US takes over the headship or the leadership of G20, how will America now rethink and refocus and strengthen G20?
All right. Now let's have your final thoughts as well, Dr. Lekaba. If they don't come to an agreement with the communique, what alternatives exist for advancing cooperation outside the G20 framework?
It is. I think the realignment has continued to move away from the US dependency. And I made examples earlier on about Canada talking to the EU, Japan engaging with China, and all of that. The realignment is taking place. So if it happens that the communique is not put out, of course now it means G20 is almost becoming useless or insignificant.
Okay.
And therefore, it will tell you what to expect in the US leadership, that it may not put even much effort in making sure that the discussions that are taking place, the Sherpas, the tracks, the finance tracks, and all the working groups continue with the agenda that has been going on since the G20 was established. But I think, again, it may open up a window of opportunity for the US to rethink its engagement. I mean, it assuming the leadership of the G20. It may open up a window of opportunity for the US to rethink how it engages with the world through the G20 and all the members of the G20. Those are my thoughts as it is at the moment.
Okay.
positives and the negatives.
All right, that's fine. Thank you so much, gentlemen, for your time and for speaking to us on this. Franklin Ngwu, economist, a chartered risk manager and professor of strategic management and governance with Lagos Business School, Pan-Atlantic University, and also Dr. Frank Lekaba, senior lecturer with Wits School of Governance in South Africa. Thank you so much.
Thank you.
With that, we'll take a quick break. When we come back, the show continues. Stay with us.